The difference between a plan and a strategy, Eric, is very simple. A lot of people confuse that, especially at the beginning, and I was guilty of it because I hear people they saying you have to have a trading strategy, but every time I actually use the strategy, I'm still losing. I don't understand why. Because strategy is part of a plan. So a plan is pretty much you create your own set of rules. Like look at this paper, for example, like this particular checklist per se, right here, right?
Oof,
It
I'm on a
tells you
spot.
this is a complicated one for a guy's been doing that for a long time. I can show you simpler stuff because we're going to start building that together in a very, very simple way. So don't feel overwhelmed by that. But this will be the set of rules. What triggers your trade? What objective do you have? How much money you want to pull out of that trade? How much money you risk to do that? Like if you want to risk $1, right? If you want to make $10, for example, you want to risk $1, or you want to make $5, you risk $1. A lot of people they jump in and they make 1,000, they lose 1,000. They make 500, they lose 1,500, and there's no consistency in their wins and losses, and that's what creates chaos. That's what makes them blow up their account many times. And you're looking at one of the guys that did that for so many years before I learned my lesson. So the consistency comes from your behavior as you go into the trade, just like investment. People make money from investment because they buy and hold into it. That's consistent behavior. They don't really, check every day. They jump in, they jump out because they're worried and stuff. They just buy and they hold on, and that's what makes them money, their consistency in their behavior. Trading is the same exact thing, but it's very leveraged. Like let's say I get you to understand the whole trading plan, and I sign you up with one of those um, Wall Street firms, like the proprietary firms, and get you licensed, right? I can leverage you 100 to 1. So for every thousand you have in your brokerage account, you're trading $100,000 of buying power. So if you put only $10,000 in your account, you're not trading 10,000, you're trading $1 million. So that's the only difference is between leverage and investment. Like day trading could be leveraged to a big, big time, which accelerates your winning, but also accelerates your losing. You're losing trades. So we need to have consistency in that. So a trading plan is a set of rules you put to yourself. You can, let's just say, in a set of rules, you say, I'm not going to lose more than $100. I'm going to start slow. And for the first month, I'm not going to lose more than $100 per trade. And my profit objective is to make $500 of that trade. So you set the trade, you set something called the stop loss, and you set something called the profit objective on the top. And the trade is either going to hit your stop loss and make you lose $100, or it's going to jump up and it's going to book for you $500 profit.
Thank you for watching. Share this with friends and family, and please subscribe.